Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everyone. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On the show today, the earnings parade continues. It just does not seem to end. We got Apple, we got Amazon, we got Google, we got Visa. We have our guest today at 8:35 who will hopefully be able to discuss all of those. He is Mike Olson, managing partner and senior equity analyst at Piper Jaffray. Joel, tell us how we're doing this morning in the S&Ps.
We got some red on the screen. Had a pre-market high of 31 even. That was a little pop off the open. We came back down through the close, took out the former low of the week at 0950. We got down to 97 even, trying to rebound here. Going back on the upside, I want to see if we could overtake those two lows we had at 09.5 and 11, mid-range on the day, 14 even. So we're going to see some good volatility today. We have crude trading in the red by 8 cents at 65.72. Gold up $1.30, just hanging around 13.50. Not a lot of volatility, but gold does move off that jobs number at 8.35. Silver in the red by a few pennies, but still above $17. Action all over the place. Dennis, did you go to sleep last night?
I can't believe you didn't give the crypto pricing. Are you done with crypto now? Are you officially done with crypto? Because this is one.
Well, he sold out, so he doesn't care. He doesn't care because
I'm sorry.
Crypto, you get out at 10,000, then you're done with it. You don't even look at it again. Look at your crypto markets this morning. It's annihilation over there.
It is. I'm sorry. Bitcoin down in the red here by 18%. Trading at 7,800. You have Ethereum in the red, Ripple in the red. They're all in the red here. No, I mean, it took out that 9,400. Let's see if we get.
You even anticipated that 9,400. You sold it ahead before it took off.
I did.
You're out. Are you getting back in? I can get back into the cheap.
I don't know. I mean,
I don't know. What did Jeff say? What's Jeff been saying? Have you talked to him? He out? Is Jeff out?
He's still holding a little bit in his back pocket.
Totaling?
Yeah,
totaling HODL or whatever.
He's got a few. But we're looking into these other currencies. Kind of
other cryptos.
Yeah. Why? Because there's value.
They're all the same thing.
No. There's other coins for different reasons. Just looking at them.
Hey, when I look at the correlations here and bring up that coinmarketcap.com, scroll through the list right now because, we've had BK, we've had a lot of people arguing. You have to have a diversified crypto portfolio.
You got it? Okay.
I've been arguing these things are so dang correlated. I don't know if that saves you if you eventually get the crypto crash. Look at them. Bitcoin down 16%, Ethereum down 27%, Ripple down 33%. This is a 24-hour period. Bitcoin Cash, which everybody's talking about, 2,400. It's $1,000 now. Down 23%. Cardano, never heard of that one. Down 34%. Neo, Litecoin, the guy, Litecoin. What was the high in Litecoin? Remember that? That was the top. When that Litecoin guy sold all his holdings, he sold all his holdings, and he gave the argument that, I don't want to have a conflict of interest because I'm running the company, so I don't want to have a conflict of interest. That was a crock. That was just an excuse to sell. He sold it all at what price? Like 380 or something. It's $115 here now.
All-time high.
This bubble has officially completely burst. And now it's just like, okay, so it's going out with a whimper for a while, but now it's going out where everybody who bought it after their turkey dinner is there saying, Bitcoin's going to replace the US dollar. Obviously now coming and looking at this saying, wow, they lost a quick 50% for the most part because a lot of those guys were buying at 16,000, 18,000. Some of these other cryptocurrencies higher too. I think they're all the same thing. I mean, I don't think there's really any intrinsic value to any of them. Maybe there is. Maybe I got to do a little bit more homework, but the correlations really state the obvious here that they are all similar. Okay, I found one that's up. Digix Deo. Scroll down and show us up 39%. So what? That one must be the new hot one. Digix never heard of it.
Flight to quality.
I went through. I'm keeping going here. Hang on. Okay, so out of the top 100, that's the only one that's up. 99 out of 100 are down. Most of them are down 25 to 30% today. Wowzers.
What about
crypto?
What about XLM? How's that doing today? Because we just got a buy alert from the Crypto Prophet in XLM at point.
What is XLM?
I don't know. We're just looking at it technically.
What is it? I don't even know what it is.
It's a coin. It's going up here.
How's Doggy Coin doing? Where's Doggy Coin?
It's barking. No.
Doggy Coin. There it is. Oh, it's down 29% today. It's up 0.0036.
Then you gotta buy, Dennis. Just get in there.
The XLM is down 30% according to Coin Market Cap.
Yeah, that's why we just issued a buy alert because it's down.
Anyways, I've been on the sidelines. I didn't make any money all the way up, and I'm not losing any money all the way down. So happy I'm not losing on the way up or on the way down. Obviously, was disappointed I wasn't making it on the way up. I'm going to stay on the sidelines again because I cannot figure out how to fundamentally value these things. People arguing, we've even seen Josh Brown argue that the intrinsic value of these things, for the most part, is zero. So I don't know. Anything can get hot. Maybe there's some value to some of these things at a certain price, but I don't know. Like, here's the argument, and it's not going to be a crypto show because we got a lot, but you can think of some, think about the third world countries that they have. Their currencies are very volatile. Obviously, inflation runs rampant. Maybe there's a place for some of these cryptocurrencies in those countries, but why do we need this in the U.S. or North America when we have stable currencies? Why do we need it? I don't get it.
All right.
Why is replace the U.S. dollar? I don't get it.
Why? Because Trump's going to devalue the dollar.
I think that's just hope talking when you're saying it's going to replace the U.S. dollar, and I don't think that's the case. I think there's a value to some of these things somewhere, but that value might be a lot lower even than where it is today. But nothing goes straight down. There's going to be bounces here. Maybe even we get bounce back up, but I think it's more of a market now where bounces to be sold as opposed to dips to be bought. That's my opinion on the cryptos.
Okay. All right. We've talked about 7 minutes here and we haven't mentioned all these earnings reports. We got to get to work.
The stocks are down 30%. So you had to talk about crypto for a bit. All right. Spencer, you're going to lead the way here. We have so many big earnings reports here. Lead us to where the money is being made or lost here this morning.
Well, we're going to start with Apple this morning. Q1 EPS of $3.89, which is a 3-cent beat. Sales of $88.3 versus $87.28 billion. So a slight beat there as well. Q2 sales guidance, not great. 60 to 62 billion is what they see for the quarter. 65.73 billion was the estimate. iPhone sales, which is the big number, down 1%. iPad sales were up, Mac sales were down, but iPhone's the big number, and that one down 1% year over year.
The stock got murdered right off the initial numbers, and the numbers weren't that great. So stock went all the way down. Well, I saw 162.
You're right. You're right. You did get a low print, 162.54 just after the initial number.
And then we've rallied since then. Obviously, last night we blasted off into orbit, so they're way overshot on the upside too. This thing went up after they decided to buy the dip. They just kept buying it. I saw 174. You did.
You saw
at a 12-point after-hours range. Apple.
It was relentless, though, Dennis. Look at that relentless rally. This is on a 15-minute chart here. Let's go a little bit shorter time frame. A 5-minute here. You did get over, boom, pre-market after-hours high, 174.27. Just straight up. Was something in a conference call? What did we get? And then also, I want to see if that coincides with any daily levels. Boom. What's our 3-day high? No, look at that. Our 3-day high. Well, just below that. What's 74? What are you going to say, Dennis?
I was going to ask you what the straddle was, because I'm just thinking, it's funny. It goes down $6 and up $6 from the settlement. What was the straddle?
Spinner, I don't have that platform up. Spinner, can you
Spinner,
check?
What was the straddle? He's in the chat. He'll have that.
Spinner,
I don't have my options up there. What did the straddle close at on Apple? I can go grab it quickly if we don't, but they're usually pretty good on that. Was it $5-6? Because it's funny that it would go up down 5. All your straddle raters are right there to provide support. And then it goes up 5 from there, and all your straddle raters on the other side are there to provide support or resistance. So I'm just curious if it was $5-6, because that would make sense with the after hours action.
6.92.
Those straddle raters know, man, and they hold
Ed
it
Seeking,
in. So,
he's in there at 7.05, so call it $7. Thank you, guys. Thanks for your contributions.
why that works. So think about it. If you got the straddle on, or if you're writing, options on both sides, 162, it's down, $6. You're getting right towards where, if you're a straddle buyer, that would be the money. A straddle writer would be breaking even at those points. Those levels are defended, and obviously you have the options of people trading the stock against the options at those prices there. So that gets interesting. So very interesting that, it goes down 6, then rallies, and rallies basically up 6, right to the resistance point. Now it's settling flat. So straddle raters are like maxing out right now, obviously with their gains. And anybody trading after hours, you got to watch that, because when a straddle is like $5, a lot of times the stock will go down 5 or up 5 in either direction and run into some trouble. And that's because sometimes they open interest on those options, with options traders jockeying the stock against their options. I know the options aren't open after hours, but the stock is. And the big boys will trade the stock against their options. So keep that in mind when you're trading these stocks, that once you get into the premium past this, or right to that straddle point, sometimes that is a reversal point. And that worked perfectly last night with Apple on both sides.
And I think it did. I think John Dotson made a reference to Facebook. May have done a similar thing. I don't know if it was him or Spinner, but let's just talk about it today. Technically, stay green, maybe 168.25. We're trading up a little over 40 cents here. If we do go into reverse, I just would keep an eye on some daily lows. Double bottom at the 66.5, 66.76 level. So that still hasn't come into play yet. Recent low of the move, a 64.70. So there's your levels to keep an eye on, but you need to stay green. That close was 67.78. And holy Toledo, let's go to Amazon. Up 80 sticks. Oh my, I'm glad I'm not trading this, because I would be short.
That was wild. Right before the number, obviously, we had the big sell-off yesterday. Everybody nervous Nellies didn't want to hold the report. Look at the action in the last 30 minutes. We went from 14.20 all the way down to the low of the day, settling near the low of the day, down to 13.85. So basically lost 25 points, no, 35 points. I'm not bad. 35 points ahead of the number. Nervous Nellies. And then, it was a great number. Give us a number, Spencer, on Amazon.
Q4 adjusted EPS $2.15 versus $1.85. Estimate sales $60.5 billion versus $59.83 billion. So good numbers there. Q1 sales guidance coming in mostly in line. 47 to 50 billion is what they see. 48 was the estimate. They also sold. They had good cloud numbers again. So their net sales were up 38%. Cloud numbers are strong. Cloud sales are strong, and that's where we're at.
Talk about this after hours action, Joel. It's wild.
Woo-hoo, look at this. You got a dip. What was that 1380 print? That 1380 print.
Well, 1385 off, close, and I think a little quick dip on the number.
13.8, yeah, 80.01. That was in your bracket between 4 and 415, and then you just started marching, a relentless march here. Got all the way up to 1485, trading at 1470. I don't know if I could say the pre-market's high is, or the after hour high is the high for the day. Maybe knock on the door at 1500. I was emailing with Nick, and I said, Nick, you got any questions for Gene coming on at 4 o'clock? And he goes, yeah, will Amazon hit 1500 by the end of the year? Well, Nick, if you're listening,
by the end of the day.
Yeah. I don't know. How do you play this one, Dennis? I mean, up $80. I mean, neither I have owned it, will ever own it.
I don't know. It's such a bad tape, but Amazon has been fighting this tape. Like, look at really the tape, and just look from the last week. S&Ps have been weak. Now we're breaking down here again. You have a lot of tech stocks breaking down, but Amazon just resilient, even in that bad tape until yesterday, it had held up well. I'm nervous to own anything right now. So it's hard for me to say, come in here and buy Amazon up 80 points because this tape is not that great. I mean, yes, you're seeing some stocks rally, but the S&Ps, are looking like they're ready to roll over. The Qs are trying to take out their support level. You got crypto crash over there. You've got some money coming out of risk assets. Amazon is a risk asset, but they love it.
Wait,
so I don't know. I got to almost sit on my hands up here. What do you think, Spencer? What do you think?
Dennis, we were just talking on the pre-market show about how everyone is underinvested. Get in. Come on. You were just saying 20 minutes ago.
Yes. Yes. And I did say that Joel, and we're arguing, could you have a 10% correction here? I don't know if you get to 10% because there is everybody underinvested. I'll tell you, I have been underinvested. And why is that? We talk about this money being on the sidelines for so long, but why is that? Because if you have been in the markets for more than 10 years, you got murdered in the financial crisis. Anybody who's been in the market longer than 10 years got absolutely annihilated during the financial crisis. They got burned bad. I got burned bad in my investment portfolio. My trading portfolio is a completely different thing, but my investment portfolio got hit hard during the financial crisis. So what I do, once we started coming back up, I started to lighten up stocks because I was like, man, I've made a lot of money in my trading portfolio. I don't want to lose it on these investments. So, in the next few years, I lightened up and I've been underinvested since. I didn't think it could keep going. I didn't think, that we weren't going to get some type of a pullback, but we've never really had more than a 10% pullback in the last 6 years. So there's never really been that big opportunity to get back in. So people continue to chase this market higher. Money managers continue to chase this market higher. Every time we pull back, we say it on the show all the time, is underneath demand. And that is from money managers who got too light back a few years ago and have been chasing the market ever since. Believe me, they do that. Now, eventually you'll get to a point where it just got overdone and eventually needs to have that 10% correction. The market will correct 10% again sometime. It's not going to go on forever that we're just going to continue to go up without a 10% correction. Maybe even get to that bear market, point of a 20% correction. But I don't know what the catalyst is to take us down. Is it just going to happen overnight? Maybe that is going to be how it's going to happen, where everybody just gets and we crash overnight 10%. Everybody says, what the hell happened? Well, we needed it, really. But that being said, BTFD just continues to work. Even look at the reports from last night. Apple down 6 is now trading higher. You had Google, which was at one point last night down 80 points. It's now only down 45. So we haven't got to the Google numbers yet, but you come in this morning saying, oh, Google's having a terrible day. Yes, it is, but it's off those lows significantly. So there's still people who are still coming in here and buying the dip every time you get a significant dip in any specific issue, especially the FANG names. So I don't know. I'm at the crossroads here because the tape is telling me, and I've always been a tape trader, that maybe we're due for something bigger. But then the psychology behind it tells me that there's so many buyers underneath here that we're not going to get a significant correction. So I'm sitting here not really knowing what to do. It's a tricky market.
All right, just real quickly, let's go to the Google numbers here because we got a lot going on this morning. We got a jobs report. We got some other stocks to cover. So let's go to the Googster.
All right, Google or Alphabet Q4 adjusted EPS $9.70 versus a $9.96 estimate. So that's a miss. Sales of $32.32 billion versus $31.85 billion. That's a beat. Buyback of $8.5 billion. They did have strong cloud sales. On the call, the CEO said that their cloud business is now a $1 billion per quarter business. However, I think the street's looking at their traffic acquisition costs, which were up about 33% year over year, and that's the Google, of course, has strong ad sales, but that number represents how much of that they have to pay out to advertisers.
I'm sticking with this one here too. I have it in my investment portfolio. I've had it in there for about 5 years. It's been one of my best stocks. I think there's still value here to Google, even though, you're pulling back here. And yeah, maybe it needs a pause. Maybe eventually we get a breather where we come back down, to the $1,000. Maybe that eventually happens. But there's just, some value here too. It's like growth with, value attached to it. I love the Google name. I love the Apple name. I've had those in my investment portfolio a long time. I'm sticking with them long term. Short term here, Joel's going to break down the technicals and let you know how to trade this.
Oh, yeah. Let you know. Yeah. All right. Thank you there, Dennis. Let's see here.
I'm saying I'm hodling long term.
I can give you, first of all, have been terrible in the stock because I've never owned it for a lot of different reasons. Secondly,
Why?
it's a
Stop. Why have you not owned Google?
Why have I not owned Google? Well, I should say that I don't own it. I would say that I probably own it through, one or two funds that I'm in.
Well, yeah.
Yeah. So I can't say I'm not.
Well, why did you not buy Google outright? Why have you not played Google and invested in Google? I'm just curious.
Because I'm chicken. I don't know.
The financial crisis burned you too.
Yeah.
Seriously though, you got burned in the financial crisis too, did you not? A little bit.
I mean,
you were not heavily invested.
I would. I was.
Bill likes hard assets. He likes real estate.
I was too. But I've been underinvested. But I've been underinvested for a long time. So I just I can't say it's a good thing or it's a bad thing. I just have always had much lower expectations for the market, and my portfolio has proved that out. But
it's a trader in us. We've always been, short side traders.
Yeah, no, I mean,
it's what it is.
Overall, I mean, you miss on big runs, you missed on small runs, but if you're always looking for 5, 6, 7%, and you had those gains from 2001 to 2010, then it's not too bad. Have I missed out on much bigger gains? It's all about risk reward. So too conservative. I guess that's the best answer for it. Pre-market low is 1092.02. We've got a nice bounce off that since making that. Let's just look at the close. We're a ways away from the close here in Google, huh? Boom, you're closed. You might see
40 points off the close, and we're 40 points above the pre-market lows. We're kind of in the middle of nowhere.
Yeah, I agree. Let's go to the daily chart, see if we can see anything on the daily. Man, I like 1,000 if it gets down there, but I don't think we're going to see that today. 128 points away. Well, where do we break down from? Maybe look for a gap fill. I'd say resistance at 1157. And if you want to look at support, we have a low at 1117. So that was a daily low back on January 18th. See what happens there.
All right, Spencer, where do you want to lead the way? We did the big three, and now we have a lot of other ones. Should we do ExxonMobil?
Yeah,
maybe?
I was going to say Exxon came out at 8, so let's do that one
now. I wanted the pop to 90. I was licking my chops. I was hoping we get a low. We went up to 89.5 just on the initial number, and I hesitated. I thought about it. Was never really bid above 89.30 though, and not much traded up there. But I knew the world was at 90. There's 300,000 shares in the book. I was like, come on up there to 90. Just touch it, because I had orders all sprayed out in the upper 89s. I was going to sell on the number, and it just never really got much of a lift, and it's been straight down ever since. So, oh well, I missed that one.
The adjusted EPS number is 88 cents versus the $1.04 estimate. On a non-adjusted basis, it was $1.97, but adjusted was 88 cents. $1.04 estimate, 41 cents in the same quarter last year.
This is a pretty good shellacking here too, having its number on the Dow as well. Obviously, a major component here. Down $2.50 for this big oil conglomerate there. 86.75 is where we're trading. I don't know. I got a couple bombs at 86, but then below that it opens up to 84. There's so much resistance up at 90. It's hard for me to get excited to buy this at 86.65 because I don't see it getting above 90 very easily over the next while. So I see like 3 points upside, like 7, 8 points downside, because I think it can get the back down to the 80s. So I don't like the risk return here on ExxonMobil. 90, if you go back to your monthlies, has been a major resistance point forever. We know there's size there too. Oil, has obviously come back significantly from the lows, but still, when you put it in perspective, in 2014, oil, was trading up at like 80, $90. ExxonMobil was at like $100. Now it's 90 and oil's down at 65. So I don't know. I don't like Exxon really here just because the risk reward doesn't line up for me. I think there's more downside than upside.
Let's see if you get a shot here at your pre-market low. Again, your pre-market low was 86.01. That coincides nicely with a few lows on your dailies at 85.98 and 85.93. So good. I like the support there for today. Problem is, if it cuts out there and it can't catch a bid at 85.71, You got a nice vacuum here down to under $84, a double bottom at 83.66, 83.64, but some daily support at 86 as well. Going to the pre-market chart, let's see if you're looking for resistance here. Since spiking at that low, you have not been able to climb into the $87 handle, even $86.99. So that's your minor resistance there in Exxon Mobil.
We are waiting for the Chevron number. It usually comes out at 8:30, so in 4 minutes, but we're also getting the jobs number at that time as well. So lots of big data coming out here for us at 8:30. Let's go to the Visa report from last night. Visa is trading down a little bit here in the pre-market. We were talking in the chat yesterday about the phenomenal monthly chart of Visa. I mean, this stock has been straight up for years. Go up to the monthlies. 2011, this was a $17 stock. 125, you're talking about 1,000% this thing's up in the last 6 or 7 years, pretty much straight out up with very few major corrections in there. There might be a couple little 10% corrections, but this has got to be one of the best stocks from the last 7 years. Every time it pulls back a little bit, it's been a buying opportunity. MasterCard's the same story. MA Visa moved together here. But thoughts on the Visa quarter? Spencer, give us the numbers. Joel, break down the technicals.
This was a good quarter, too. Adjusted EPS of $1.08 versus a 99-cent estimate. Sales of $4.86 versus $4.84 billion. They reaffirmed their annual sales growth guidance would be in the high single-digit range. They announced a $7.5 billion buyback, and they're raising their quarterly dividend from 19.5 to 21 cents per share.
Wow. Good quarter. You know what? It's just expectations are so high, and you have so many stocks selling off on decent numbers. The stock had run up pretty much in the report too. Back in December was 110, 125. Simply expectations too high.
All right. You've had a couple lows. Let's just look at the lows that you've had in your after hours trading. Someone made a stand here at 123.26, a couple different brackets, and then you slipped under 123.50. You found some buyers too. The problem is that you're not distancing yourself from that level. You're only at 123.74. So there's some of your minor support, your pre-market lows, which you still may see. Only down $1.98, and that's down 1.57%. That's down a little bit more than the market, so you're catching a few buyers here. Let's go to the daily chart, and it's just been basically straight up here. 120 looks like your super extra major support. Some lows in the 123 handle, 123.04 and 122.84. So don't get too excited if you take out the pre-market low. Your 2 and 3 day lows are right there at 123. Dennis, I just want to bring up a good point here from Spinner. We were talking about catalyst out there for the markets, and different things spooked the market, right? We've had what was it? Ebola a couple years ago. We've had Greece, scare us a few times. And we've had European banks being a negative catalyst, and Deutsche Bank's not helping things this morning. So different catalysts at different times. I don't know if we're going to go back.
10 seconds. I got to go hop off the number. I'll continue analyzing here.
He's going to hop off, and I'm going to tell us what we're looking for here when I get us on the screen. There we go. Looking for jobs number. We're looking for non-farm payrolls of 184,000 is the estimate. 148,000 was the prior reading. Unemployment, we're looking at a 4.1% rate. That is the same as last month's reading. So let's see what we got coming out. Joel, anything happening?
This is the only time
we got him out. Look at that.
Go to the minute chart here.
Non-farm payrolls, 200,000 versus 184,000. So that's a beat. Private payrolls, 196 versus 180,000. That's a beat.
Ooh,
so
strong.
Looking good.
All right, what we're looking at here, there's only one thing to focus on, and that's your pre-market low at 97 even. We're trading 01.5, 02, a few prints here on the downside. Doesn't look like Dennis is executing many trades here. We don't want to put any pressure on him.
And unemployment was
we're not
in line.
We're stuck. Once again, this number is not providing a lot of fireworks. We did drop off from 06 area down. Now we're trying to get under 2,800. Oh, there we go. We got a little dip here. There's a little green on the 1 minute, folks. You don't see me go to the 1 minute very often, but short term, you have to do it. So far, your low dip has been 0150. Your pre-market low is at 97 even. overall strong numbers. So let's see what some of your financial stocks are doing. Goldman Sachs showing some green here, down $1.73. Let's see. Let's do the 15-minute chart. Get a better look at some of your financials. We need a 24-hour session. Boom. Trying to catch a little bit of bid up, but we're primarily keeping an eye on the S&Ps and whether or not we'll test that pre-market low of 97 even. So I guess a little bit of a hot number. That goes with the theme of rising interest rates. Rising interest rates is not good for the market. The other thing is the Fed behind the curve. I mean, have they raised interest rates enough, or are we going to have an inflationary period? But if you're worried about inflation, you'd be looking at gold, and gold is getting hit a little bit as well. Crude not affected by as much in this number, but SPOOs are trading down here, trying to hold 2,800. Haven't taken out that pre-market low of 27.97. That was your lowest level. Oh, I brought my wrong sheet up, but let's see. Last time we were in under 2,800 basis the SPOOs. Let's just go to this, take a look at the daily contract. And when were we at ES on a daily? Boom, let's take a look. See what that coincides with. Man, my charts are not changing here. What do we got here? 8:32 until our break comes up. Spencer, you got any commentary on those numbers?
A hot number. I mean, the unemployment was in line, 4.1%. The private was higher, the 196 versus 180. Non-farm higher, 200 versus 184. So good news all around. And so guess we'll wait and see.
Yeah, TLT going down here. SPOOs catching a bounce here. 03.25, couldn't quite get under 2,800. I think if you're looking for a number basis, the SPOOs, we were trading right around 28.06 when that number came out. So we'll look at that as resistance. Let's see here. Apple has gone red, something you don't want to see there after being up so much. Down 78 cents here, trading at 167 even. Amazon trimming a little bit, still up over 5%, up $75. Visa not moving much off that number. Let's take a look at some of your JP Morgan, only in the red by 37 cents here. Let's see what Goldman Sachs and some of these other financials are doing. Goldman is still in the red by $1.36.
Banks are catching a bid. Okay. Banks are catching a bid. They're all bid up here now. So yeah, Goldman's still a little bit in the red here. Bank of America is your best because Bank of America is most liquid. So whenever you trade these jobs numbers, you want to look at Bank of America because it's liquid. The other ones aren't, sometimes they're getting bid up, but you're not seeing the actual trades because they're just illiquid. BAC went to the green here, is trading up 6 cents right now. Financials are catching a bid on this number. Morgan Stanley, Wells Fargo is bid up to flat here now. Goldman Sachs is still trading down, still offered down $1 here right now. So it hasn't not quite got quite the bid the other ones have. Citigroup has come back to flat. I mean, you're talking a day that you're down 20 S&P points. The banks are flat. That's a hell of a morning for the banks.
Yeah, very, very much so. As we mentioned, the TLT is getting whacked here. So, I mean, how much will interest rates be going up? TLT here on the lows of the session. Let's go to a daily here. I haven't looked at a daily in TLT in quite some time. Boom. We've taken out 120 here. I see a double bottom at 118. We went from 118 to 120 in 3 days here. So let's see. We don't want to catch too much in that area. But for the most part, hot job numbers mean higher interest rates, not great for the market. All right, 8:35, Spencer.
Yep, we're going to go grab
Let's talk to Wall Street.
Mike Olson with Piper Jaffray. We're going to talk Apple, Take Two, Amazon. We'll be right back with Mike. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel, joined by Joel Elconin and Dennis Dick, and we're on the line with Mike Olson, Piper Jaffray. He's a managing director and a senior research analyst, covers Apple, covers Take-Two, covers much of the tech sector. Mike, how's it going today?
Going well. How you doing?
It's going pretty well. Digest for us this Apple report. iPhone sales down 1%. It seemed like to me, and I'm just going off memory here. It seemed like the analysts were super bearish heading in that department, and 1% year-over-year decline in sales. So what did that number say to you?
Yeah, I mean, the iPhone units were below estimates, but the mix was better than expected, and that was due to a higher percentage of iPhone 10 in the quarter, and that drove iPhone ASP significantly higher than street models. You know, the March guidance, as expected, is below the street, but overall it appears, you know, that this was generally a decent quarter considering how negative sentiment had gotten on iPhone 10 going into the numbers.
What about the second driver, which they said was wearables, was the second largest revenue source? Was that a surprise for you?
Yeah, I mean, I think, you know, they're having a lot of success with Apple Watch, and there's kind of these little nuggets of the business that are starting to become somewhat material, but not really material enough to be significant when it comes to comparing it to the iPhone. So in other words, when all's said and done, and we kind of look at the model and where the numbers shake out, the iPhone revenue still is such a massive contributor, considering it's basically 70% of sales. And then once you factor in services revenue, which is another 15% or so, which is primarily coming from iPhone, you've got 80+% of your revenue essentially from one device. So it's true there's other things that are doing well, but really this is still an iPhone story.
Anything that was said on the call that you found particularly concerning or bullish, made you bullish?
I mean, nothing overly concerning given how concerned people already were related to iPhone 10. You know, I think as we look at the things potentially that could be a catalyst going forward that are kind of outside of the fundamentals of the demand of their devices, you know, Apple indicated that they're looking to get to a net cash neutral position, which would suggest that they're going to need to eat through about $163 billion of net cash. So they're going to announce more plans for that cash on the March quarter conference call. But, you know, if they buy back a significant portion of stock, for example, in our numbers, if they bought back $100 billion worth of stock over the next year, it would add about $1 to our EPS estimate. So it's pretty significant.
We're on the line with Michael Olson for Piper Jaffray. Michael, I got to ask you, and this is not my argument, but this comes out from Nick Shaheen. He's a frequent guest on our show. The debt. I mean, he took over that company. Steve Jobs had no debt with the company. Now the debt is, I don't think it's $100 billion yet. They're using the debt, you know, in some good ways. Is that something that concerns you moving forward with Apple?
It isn't, just because from a cash flow perspective, the company is generating, you know, just massive amounts of cash flow from operations each year. In fiscal 17, it generated $48 billion of cash flow from ops. So, you know, this isn't really something I think is something that we need to be concerned about. And ultimately, you know, one of the reasons historically that they've raised more debt is because they didn't have as much access to their foreign cash, which was, you know, 90% of their cash balance was held overseas. And now that they will, as a result of repatriation, I would expect them to be raising less debt and using their existing cash balance.
All right, Mike, I want to move on to another stock here that was in the news yesterday, and that was Take-Two. They announced that their release of Red Dead Redemption 2 is going to be delayed again. They previously delayed it back in May. This time, however, they announced a specific date. They're going to be releasing it, I believe, in October is the date that I saw. And the stock got hit yesterday. But for you, was that a good headline or was that a bad headline?
Well, I understand why the stock got hit. It's a it reads a bad headline or has a bad headline, but I think as you think about what it really could mean for the business, it proves to be a buying opportunity for the stock if there is any ongoing heaviness in the stock as a result of it. And the reason we say that is because the company importantly reiterated their fiscal 19 guidance despite the delay. So it may be that the most interesting takeaway from this is that given the company's ability to reiterate that fiscal 19 guidance, even with the delay of Red Dead Redemption 2, that's likely a sign of ongoing strength for Grand Theft Auto Online, which is really the kind of engine behind the revenue for the story right now. So we think the fact that the game's gonna come out 6 months later, but they're maintaining that guide is a good sign for what they're seeing in their business currently. Probably a good sign for what they're gonna say when they report the December quarter.
They also announced they will have a quote highly anticipated new title from one of 2K's biggest franchises in fiscal year 19. Any conjecture as to what that could be?
Yeah, we expect that'll be a game that they've had out before. It's called Borderlands, and it's a fairly sizable game, but not nearly to the degree of like a Red Dead Redemption or Grand Theft Auto. So, for example, we're modeling for Red Dead Redemption to sell around 16 million units when it's released in fiscal 19, and for Borderlands, we only have it modeled to do about 5 million units. So it'll be exciting, but it's a much smaller title.
Okay, but by and large, yesterday's headlines presented a buying opportunity. Just to reiterate what we said.
Yeah, absolutely. I think there's no reason to be concerned about this title or concerned about the fundamentals of the business. In fact, as I mentioned, it probably suggests the fundamentals of the business in the near term are doing better because they have the confidence to maintain that guidance despite the delay in the title.
All right, moving on to another earnings report from today, or yesterday, I should say. Amazon, thoughts on that report?
Yeah, across the board, they had upside on all segments, so it was a really strong report. I think, an interesting thing is in the midst of the top line beat, Amazon recorded its highest ever North America operating margin at 4.5%. So that's certainly a positive, and maybe I'll kind of boil it down to one key takeaway, which is that while we do expect Amazon will continue to invest heavily in a lot of different areas, and they talked about some of those last night, we think that the company's margin guidance for Q1 could prove to be overly conservative, and we're already modeling right at the high end of their guidance range. And looking at
why is
Q2
that?
and Q3, why could it be conservative?
Yeah.
Really, it's because of they have very easy comps on a year-over-year basis for margin expansion because they were investing so much last year in different areas like India, fulfillment, Prime Video, et cetera. So our expectation is that they'll continue to kind of trend towards the high end or slightly above. If you look at, for example, the past 8 quarters, the company's exceeded the high end of its range by 30 basis points. So not only do they have easy comps, but we're also just kind of following what the recent trend has been as far as upside versus the high end of their margin range. But then I was also going to mention, looking at Q2 and Q3, the year-over-year margin expansion comps get even easier, especially in Q2. So throughout the rest of the year, we believe the Street's modeled an average of more than 100 basis points below our new margin estimates. And all in, we think this makes for a good story that has a good combination of strong continued top-line growth and then margin expansion through the remainder of 18.
Hey, Michael, let me go back to Apple real quick here. Where is Apple in the comp cycle, the comparable cycle? I mean, that's really how the stock trades. So could you give us an update on that?
Yeah, so getting back to what I mentioned earlier, it's all about iPhone units really and iPhone revenue. And if you look at this quarter, the March quarter, it's actually quite a bit easier comp from a revenue and units perspective. It's about a 600 basis point easier unit comp and a 400 basis point easier revenue comp. And then the comps don't really get any harder in any material way in the June and September quarters. So we're at a point right now where it's not super easy comps over the next few quarters, although it kind of is in March. But then June and September are kind of just unchanged. So it's a position where if Apple's able to deliver on an exciting array of new products as we get later in the year, they'll be positioned to potentially see accelerating unit growth.
All right, last one, we'll let you go here. Thoughts on the eBay report?
Yeah, so eBay has done a good job of taking a kind of tired brand and essentially cutting costs or containing costs and finding ways to start to try to rebrand themselves. It's a very entrenched brand. People think about it as an auction site that has used goods, that has maybe a kind of a high purchase and shipping or high friction purchase and shipping experience. So they've done an admirable job of growing without that, and U.S. volume accelerated again. For multiple quarters in a row now, we've seen U.S. volumes accelerate as far as items sold. So I give them credit for that. I'm still a little hesitant that the stock may not already reflect a lot of that. The stock trades at a low double-digit EV to EBITDA multiple, which is kind of where we think it should reside. So we're not sure that there's much additional upside from this point, but I would say that the migration away from PayPal should drive long-term, incremental operating income and better experience for their sellers. So that's a positive move, and that could provide some degree of tailwind for the stock in the near term as investors contemplate that as well.
All right, we've been on with Mike Olson, Managing Director and Senior Research Analyst at Piper Jaffray. Mike, thanks so much for the time.
Wait, Mike, you going to the Super Bowl? You going to the Super Bowl?
No, I'm not. But I'll tell you, there's been a lot going on around here as a result of it, and it's been fun but distracting all at the same time.
And you're cheering for the Patriots, right? Because Tom Brady went to Michigan.
I'll reserve my choice, but the Patriots have won a lot of Super Bowls, and it's hard to bet against them. I'll say that much.
Okay, all right, Mike. Thanks a lot for coming on.
Thank you.
All right, let's get back to the market here, and we failed to make a new low from that pre-market low. Something I'd like to keep an eye on here. 97 was your low, and they tried to bust it down there a few times. The best they could do though was 99.50. We talk about whole numbers. Well, 2,800 seems to be a whole number that buyers like this morning. Now we're bouncing up. We haven't got into over 28.10 yet. A big number on the upside I want to keep an eye on is 28.14. That's mid-range in the day. Dennis, how you doing there? Are you in a fast market?
Yeah, there's a lot. The financials are all green here now. So we talked about them being flat. Now they're green. JP Morgan up 36 cents. Bank of America is now trading up 16 cents, up 0.5%. Citigroup up 30 cents. Your banks are catching a bid off of this number. Morgan Stanley's flat. Goldman has come all the way back. It's only down 30 cents here now. So not surprising, on a hot number that the banks are going to be hot as well. But they're chopping around. TLT got crushed. Trying to crawl its way back on it. Obviously, the banks move opposite to the TLTs. So we're really it's a chop fest here right now. And if you look at the utility stocks, they are weaker, which is expected. They move in the opposite direction of the financials on these numbers there. XLU is trading down 0.34% here in the pre-market, or actually 34 cents or 0.68%. So utilities getting hit, financials getting bought. Market has bounced back overall in the last few minutes. We bounced up about 5 points since we had our guest on there. Looking at imbalances, they are mixed, but I can tell you right now, Alibaba in the green by $1.50 here, bouncing back nicely this morning. 276,000 to buy in Alibaba. That is helping its cause. GE, which has the eternal sell imbalance every morning, 218,000 to sell. Ford, 114,000 to sell. That's an eternal sell imbalance too, it seems like. Square, 102,000 to buy. Stock is trading down 60 cents in the pre-market. One of two things is going to happen. That imbalance is going to go red, or the stock is going to go green. So, because that won't last with 102,000 share buy and bounce and stock trading down. So if that buy and bounce holds, Square could be on its way back.
One question here. Spencer is thinking about doing some asset allocation over the weekend, and he's thinking about GE, General Electric. What words of advice do you have for him on that?
It hasn't worked for me.
Wait, this is not for a trade. This is not for a trade.
Let's hear your thesis.
Mine wasn't for a trade either. I'm very good at trading GE. GE is one of my best traded stocks, but as an investment, it has been a pile of doggy poo-poo. If you're doing it technically, you got the 1580. That was a low from a week and a half ago. It's been trying to hold on there. If that gets breached, I think we see $15. So 1580 needs to hold if you're buying here at 1591 this morning. If it gets breached, we see 15. Trend is not your friend. The company is a mess. They can't figure out what the hell they are anymore. They had an oil company with their Baker Hughes purchase. They spun off their big Synchrony Financial, which was their best business there. The company is a mess, Spencer. I own it in my invest portfolio. I sold half of it actually out there a couple weeks ago there when we had the pop ahead of the earnings, and I'm glad I did. So I sold out, I believe it's 1690. It's now 1590. Every time we've been selling this thing, it's been the right call.
Well,
so
I'm not gonna do anything until I read. I believe they're on the cover of Business Week this week. So I'm gonna read.
Saying it can't go worse or what?
I'm gonna read that. Wait, what?
They're probably saying it can't get worse. Is that what they're arguing?
I don't know. But I want to read the cover story. The way I see it, it's held 1590 for the past few days. They can just hold that. But I don't know.
Here so long.
I'm the bottom fish a little bit. Can't hurt.
You can. If it holds that level at 1580, you're okay. If it gets to go through 1580, we're going to be at 50. There's a trade in here, guys. This thing goes 1575. I think it's going to be at 15. What do you think, Joel?
I think it's a consolidation. It does this a lot.
Consolidation lower.
Yeah. Yeah, we'll see. I mean, has it closed under 16 yet? Let me see here.
It needs an analyst to come out, somebody to defend it.
Yeah, we need that guy from Deutsche.
Every time the company speaks, it's more bad news. It just needs some type of life, like something. Throw it a lifeline. But I can't come in here and buy more and say, okay, well, long term. I know Tim Seymour's been arguing this on Fast Money for a long time. He was buying at 20 and saying, you got one of the biggest, conglomerates, one of the historic companies here. It's ridiculously cheap from but the earnings are going down. So is it cheap? It's been a value trap the whole time. I don't know. I've had it wrong. I had in my investment portfolio. I should have been selling out when Inch told us to sell 29. It's now been cut in half here, and I hate the stock.
Let's move on. Let's move on. Let's move on because let's do a couple stocks. Do we have any news on Zebra? ZBRA, Zebra Technologies, trading up $3 and $124.50.
Oh, that's an odd lot. So I don't know if there's news, but I can tell you that was only an odd lot that traded there. So if you're getting excited, there was literally only, as off 15 shares and then 6 shares trading up there. So is there news on that, Spencer?
Okay, no news. I would just, you got a triple top here. Not quite a triple top. All-time high 125.94. Under 120.75. Under 120. Look out. You may be going to 114.29. Another stock from the chat for DC1. Do we have anything on EW? Trading up.
Edwards Life Sciences is trading up $2 here in the pre-market.
Earnings after the bell.
Well. What is it?
They had earnings after the bell. That's what it was.
What were the numbers?
Q4 EPS 94 versus 91 cents. Sales of 888 versus $867 million. Good earnings. Guidance numbers. Sales coming in mostly higher. EPS coming in higher as well. Fiscal year guidance coming in line. So good Q1. Good guidance. Good earnings. EW.
132. You found a seller there. 3 brackets in a row after hours. There was a seller at 132 and would not move. So if you get back up to 132, you may want to join him with some stock to sell. That's one other thing I wanted to ask you here. We got a few minutes. Larry Glickman in the Google chat. Insider buys and sells. He says Charles Schwab sold 12 million. I don't know if it's $12 million or 12 million shares of his own stock. He says it's a very bad omen when a brokerage CEO sells big bucks. Dennis, do you subscribe much in the inside theory? I didn't think so.
Nope. I don't look at it. I think they're always selling, and you can say, okay, yeah, they sold $12 million worth of stock. How much money does that guy probably have in it? Does he have 100 million? Does he have 500 million in it? Look at his core holdings. Did he sell out of all of his holdings? I'll tell you, insiders are selling a little bit all the time. And if you're reading into that, you're going to be getting a lot of false signals because they just own so much stock. Bill Gates, for instance, with Microsoft, was at one point when he had so much of his stock money in Microsoft, was selling like something to the equivalent of I forget what it was like 18 million worth a day, just because he had, the 40, 50 billion dollars worth of Microsoft. He was just trying to diversify himself a little bit. And as the stock goes up, it was going up 50 million a day. He's selling 18 million. He's still got 30 million more. It was an eternal problem for him. So I think, when you get some of these smaller companies, there's something to it. So, I'm not going to say, there isn't nothing to it at all. So I should take that statement back. Some of the smaller companies, I think it does matter. If you get, like the Litecoin guy that was selling, that's not a company, but, when he was selling as a target, that was a sell signal all the way. So sometimes it is good to follow that. But when you see, a big company like Charles Schwab and CEO sells 12 million, it's a drop in the bucket. It's probably just natural diversification. And these guys know about insider trading. They aren't going to sell, ahead of the big guns. No, they're not going to do anything fishy because they're under scrutiny all the time. It's the little companies, the little stuff where you get somebody that doesn't even know, I can get away with it. A guy from Charles Schwab, not going to be pulling any, funny business.
That sounds like
too much to lose.
Such a problem for Bill Gates. Poor guy.
Oh, I know.
Only some way to help him out.
All right. Is it even need to mention any ratings today? With all the news.
There's a couple.
Well, we did have UBS initiate 30 stocks today. I don't know.
They're crazy over there.
We do have all of them.
Up?
We have all of them in the pro. Wait, you want to know what they initiated?
Yeah, give us a couple of them.
Oh,
I saw a lot of utility stocks.
Yep, it's utilities. I think it's all utilities actually now.
It's all utilities.
Yeah. What jumps out?
Want me to sum up utilities for you? TLT has come back slightly from the lows, down 50 cents. XLU is all you need to know, and that's trading down in the red by about 33 cents. So utilities tend to just move with the TLT. They have little deviations because of some upgrades or downgrades or initiations, but for the most part, they're going to kind of run around with the TLT. XLU, TLT, very highly positively correlated.
And
30 seconds. We didn't do the Chevron numbers. They came out at 8:30 when the jobs number came out as well. Spencer, just quickly give us the Chevron numbers. They must have. They followed suit with Exxon. So you took the lead from Exxon a half an hour earlier. You were happy that you did that because Chevron is now trading down about the same amount as Exxon, both down about $2.5.
Right. I only have the GAAP EPS, so $1.64 on GAAP basis versus 22 cents, which obviously does not compare in the same quarter last year. Sales of $37.61 versus $37.6 billion. So it's like basically inline sales and GAAP EPS you just can't compare.
All right, pre-market low you just made here at 122.01, getting a nice bounce. Let's see with the dailies here, did take out a double bottom at 124.05. So if you do go into rally mode, that will be your resistance. Daily lows, you don't have a lot to lean on here. 121.07. That was your low from December 21st, and December 20th you had a low at 119.65. I don't think that we'll see those levels. That's just one other comment here out of the Google chat here.
Sure.
How about the VIX? And it's it's not even. I'm looking at it, and it's not even getting a huge pop on a day like this. If it's not going to move today, then when the heck is it going to move? What do you have?
We popped up. Yeah, but really, though, we're up. We're trading 14.39. So we are up. We're up another buck here this morning on the VIX. And, we're significantly higher than where we were, just a couple of weeks ago. Think about when we were trading down 9 and wondering where we're ever going to get back to double digits. So we did. Risk has come on. The market is a little jittery. Let's call this market jittery. I'm not going to say this is the start of a reversal. This is the start of a new correction. I'm just going to call it jittery right now. The market's got the jitters. And every time we get a pop in something, people are using that to lighten up. The question is, does the underneath demand swallow that up? And, do we continue to just, go higher? Or is, this going to be enough to spook away those people who are sitting on the sidelines waiting to come in? And if the sellers decide to start to come in, then we could be the start of a correction. So jury is out on this market, is jittery right now, but I'm not going to say the correction is coming. Not, it's too hard to tell yet.
Let's, hey, Dennis, if you want to hop off here, Mate Curtin here in the Google chat wants to take a look at Tableau software here, and holy,
huge.
Yeah.
Huge.
What do we got?
Numbers.
We must have a good report, huh?
Ticker DATA, correct?
Yep.
Yes.
Yeah, we had numbers yesterday. I'll read them off for you real fast. Q4 adjusted EPS of 12 cents versus a 3-cent estimate. Sales of $249.4 versus $240.68 million. So good beats on Q4 numbers. They also named a new member to their board, but the Q4 numbers were great.
All right, boy, you got a nice spike. I don't know if you're going to see that 94 even print that you saw after the number of coming back down. I mean, and this is just looking at the 15-minute chart pre-market trading. 88 is holding. We're trading at 88.10. Under 88, I have no idea where this thing will stop. So that's a number to keep an eye on, at least here with 30 minutes before the open. And I think going back, I think this is like an all-time high. Let's see if it is an all-time high for the stock. Go to a monthly. Oh, no, it's been a lot higher than that. But keep an eye on 94 today. Spencer, you want to wrap things up?
Sure.
Preview our 1 o'clock show.
Yep, we're done for now, but we'll be back in like 4 or 5 hours with Gene Munster. We're going to be on with him at 1 o'clock Eastern time, the same place as you are right now, premarket.benzinga.com and our YouTube channel. We'll be on with Gene for about 20 minutes, and we'll just talk about Apple and get his thoughts on that. We're going to start doing more intraday programming, so this is just kind of the start of that. So tune in 1 o'clock for our chat with Gene Munster, but if you want to catch today's show, just go to our podcast on iTunes, SoundCloud, and Stitcher, or youtube.com/BenzingaTV. Hope you enjoyed our show today. Thanks to our guests for joining us, Mike Olson. Thanks to all you who joined us in the chat. Hope you all have a good rest of your day. And if we don't see you at 1 o'clock, have a good weekend.